Well, if you look beyond trade and the economic headlines, there are stocks that may be worth owning. And our market monitor says he's found some. Joining us now is Sandy Villere, portfolio manager of the Villere Balanced Fund with about $2 billion under management. Sandy, good to see you. Welcome back.
Thanks for having me back, Sue.
You're looking for opportunity for stocks at more reasonable prices, correct?
That's what I do, exactly, yeah.
Let's start with your first pick, and that is Teleflex. It's a medical device maker. Why do you like it?
Well, I think this is somewhat recession-proof as well. So this is a pure-play medical device company, and founded in about 1943. These guys have a long history. They've got a really exciting product called UroLift of all their products, but this one they just raised the target to where it's going to grow from 30% up to 35%. It's a very untapped market, and there's about 12,000 interventional urologists around, and they're only on 2,200 platforms. So we like this product, and we like this company, and it's one that we would buy in any dips or any volatility in the market.
Now we're staying in the medical device field. Abiomed is your next pick, and you think you could get about 26% return, looking out about 12 months. That would be one reason why you like it, but what's going to drive that return?
Yeah, so Abiomed has a temporary pump called the Impella. When we've interviewed different heart surgeons, they tell us this gives them really a bridge to decision where you can put in this temporary pump and then sort of decide, what exactly to do. And a lot of times, patients are leaving with their native heart without having to do invasive heart surgery. So it's one that has almost no competition with over 350 patents, $500 million in cash and no debt, so we love the balance sheet. We think this is going to be a good one, and it trades at a very cheap 7.5 times enterprise value to EBITDA. So we like this one a lot.
It's also a less expensive heart pump, is it not? It's a value play for the medical industry.
Yeah, that's a great point. This is, roughly speaking, it's about $25,000 when you compare it to more permanent heart pump that's about $100,000. So a very reasonable device, and something that is getting a good reimbursement from the CMS as well. Let's
finish up with ON Semiconductor. Why do you like that one?
So this is not one of the more defensive companies because it's got exposure to, it's a semiconductor company, so it's got exposure to the trade war, et cetera, but it's a very reasonable 9 times earnings. And what people don't realize is it's got incredible exposure to the 5G build out that's going to be occurring over the next 3 to 5 years. And I think it's going to be a big deal. Also on iPhones, as well as electric vehicles, they're getting more and more dollars of content on these devices and electric vehicles as they go. So I think this is going to be a big winner, and I see 30% upside, $22, $23 a share if they can just trade at a 12 multiple on $1.80 in earnings. So we like this one a lot.
All right, three ideas to go into the weekend with. Sandy, thanks so much. Appreciate it.
Thanks for having me, Sue.
Sandy Villere with Villere and Company.